And hi everybody, it's Tim Reazor, the Chief Investor Strategist here at Revere Asset Management, just after 3:30 on a Thursday night. So very quickly, stock versus market levers before we begin. Listen, we are going to tape the video podcast early tomorrow, like super early, and there's a really good chance I get that posted before the market day is closed. So if you want to start your weekend research early, super duper early, all you do is go to revereasset.com and check here periodically, maybe like say afternoon, 1 o'clock Central. And I'm going to do my best to have it up there by then. The Daily Market Insight is where I post early the video podcast before it gets uploaded to our podcast tab and to your favorite podcasting software. So I wanted to make that announcement right quick. And then stock numbers, market levers. If you take umbrage with anything I'm saying, have any questions, concerns, or comments, all you have to do is reach out to me, tim@revereasset.com. There's the portfolio extraordinaire himself, Don Vandervoort, America's fiduciary, telling people, keeping people, helping people, explaining to them why insurance is never an investment. It's to insure against a risk. Investments don't insure against a risk. Annuities are insurance products, not investments. And there's multiple ways to do whatever your annuity or life insurance is purportedly doing for you. There's much less expense, and 99.999 repeating percentage. There's a less inexpensive, more effective way to do what that product is trying to do for you. We don't sell any of that nonsense because it's nonsense to us. And so what we do is we don't sell anything. Strategy is what we do. And so if you want to understand how you're getting, can I use the word duped? Duped by insurance. Just talk to America's fiduciary right here. He'll set you straight. Don't have to be a client of the firm. We're not even going to sell you. You know why? We don't do that. We don't have any salespeople. If you want to join us and you like the strategies to which we espouse here in the videos, and you want that done for you, all you have to do is call 855-732-5932. That's just a DocuSign form away. If you want to ask your question and go about your merry way, do that too. We're here to empower individual investors. And so what does that mean? That means that we're just here to help you. And if you want us to help you by doing strategy for you, we can do that. If you want us to help you and you want to ask questions, we're here to answer them for you. But either way, we're here to help. And so don't ever hesitate to contact us, because you're not going to get stuck in some vicious marketing cycle. I don't even market. You know us because you found us word of mouth. That's how you know. That's why you're listening to this video. This video isn't advertised anywhere. So just call us 855-732-5932. And then these videos to which I'm referencing are for what? Your edification purposes only. They're never ever to be misconstrued as advice. If you want advice, you need advice. Seek advice. All you have to do is, in fact, give us a call. So here we are looking at the VIX. I think the VIX can run a little bit lower here. And I just got off the chart that I wanted to talk about right quick. And then zooming in here, and I talked about the 3 weeks tight here, and now here's another week from the breakout. And so this is why I want to talk about the improbableness of what's happening here. In your mind, it's improbable because, and I get it. We've been talking forever. Who hasn't, about what's happening in the real economy? Inflation, double-digit unemployment. Although really, I mean, it's still jobless claims, and they're still high, but at least they were under 1 million today. I mean, it's going in the right direction, hopefully, and that trend continues. But from these 3 weeks tight come powerful moves. And so now you're coming right up on here to the underbelly of the beast. And so, but I think you have a little bit more room to go, and I want to explain that here a little bit. So let's look at the S&Ps here. So S&Ps. Let's do the NASDAQ, because NASDAQ was selling up hard earlier this week, and I came out with the video that said, hey, Tesla splits. Oh, is the market going to crash? And so, but if you got beyond the title and actually listened to the video, you'll see that what you had happen on Tuesday night and Wednesday early morning was a bounce off the 21, which is what I said, which is what I was telling you. If that happens, you buy that. This market hasn't closed under the 21. And until it starts doing that, and it can do it at any point in time, it's a market and anything can happen, as you know. But right now, it's kind of got this little pattern going, and it's going to work till it doesn't work. And so we've been saying forever and a day that you buy the 21 as a low risk entry point. And that doesn't mean you buy the NASDAQ. If you've got a bunch of NASDAQ stocks and you're like, oh, I already own kind of like the NASDAQ, maybe you go out and do something S&P wise. Maybe you pick one or two stocks off your watch list. And so there's a lot of things you can do. And I even bought the metals again yesterday. I'll explain that here in a moment. But now you're back above the 8, a little topping tail action here. Does that lead to some pullback here? Look, tomorrow's Friday, anything can happen. I'm not expecting a bunch of fireworks tomorrow unless there's some kind of news that the market isn't aware of. And I would think it'd be just a quiet settle them out type Friday tomorrow. But you gotta understand my timing mechanisms. Like the charts don't look that bad. You had this vicious pullback in leaders, a big rotation in leaders, and I get it. Like you're like, Tim, this here wasn't that bad. It was the rotations in the zooms and the fastlies and the T-Docs and that type of stock. The rotation out of there was vicious while you're watching the junk off the bottom come up, like an American Airlines, a Spirit Airlines, and you get the idea. But you hold the 21, you buy that, and even if it makes you feel uncomfortable, because you're acting on rules. And so, but what keeps me grounded is not one piece of information in a vacuum. It's taking a preponderance of evidence. And so the VIX futures never inverted. They didn't get close to inverting. So the sell-off was just natural reversion to the mean. And with that doesn't mean it doesn't hurt if you're in a bunch of stocks that are getting pounded. But as I was telling you before, I had a double Dow, so did Don, and a double Russell, DDM and UWM. But I sold those. I sold those on Tuesday. I sold those on Tuesday. And why would I sell those on Tuesday? Because they got up here to the third. Here's Tuesday. They come up here and they pierce the third ATR. It's mechanical at that point. It's like, hey, are they going to zoom higher? They might. They absolutely could. It's a market. Anything can happen. But you know what? They might just base out here, which is fine too, and that's super duper bullish. But I could probably redeploy that capital in other places. So I sell those Tuesday, and then I wake up Wednesday, and one of the first things I want to do is buy a double S&P. And why? So you're looking at this daily chart. What's so special about the daily chart? I always tell you, work the 4-hour charts, my friends. Work the 4-hour charts. And so when I'm looking at a chart of the S&P, so here's Tuesday, and then I'm looking at what happens. Here's Wednesday, 6:30 Central. Look at that nice move coming up. So that's 6:30 Central, and then I'm on a 195-minute chart, so you're going to get a couple bars here for every 195 minutes. And so, but if I took this down smaller, you would see the acceleration. Like, I want to buy that. That's a beautiful pattern starting to set up, and this is still a really gorgeous pattern. So I saw this part, 6:30, shaping up into this part. I bought right after 8:30, and so 8:30 Central, right after the market open. And so, yeah, I'm okay with the SSO, but I also did something that we talked about in last Friday's video podcast, and it's really why I think you want to watch the video podcast. I bought silver, and so silver was predicated on a TNX setup. And so here's TNX, TNX again is accelerating. So now the 10-year, just last week, has gone from hovering around 0.5, like as in 0.5%, okay, to now it's 0.716%. It's a big move in the 10-year. And so it's kind of why markets haven't just raced higher. But I think what you're going to see, is now that we're at this third ATR, if this TNX starts to revert back to the mean, just like it did back over here, what I think you'll see, just because I think you'll see it doesn't mean it's going to happen. I cannot stress this enough, stock nerds, market lovers. I think you're going to see the S&Ps move higher, the NASDAQ move higher. You'll see the other indices move higher as well. And it's going to astound a whole bunch of people. There are a whole bunch of people that are not participating in this market. And I'll talk about that with Don and Danny tomorrow morning on the video podcast. I'll explain how we can kind of prove that to you, and you can use that information to your advantage. But what happened here? If I'm looking at the TNX around the beginning of June, starts to accelerate, okay? and then it comes off, and then there's 6.8, there's 6.15. So I'm going to take the TNX off here, which is the yield of the 10-year Treasury. I'm sorry if I didn't say that, I apologize. The TNX is the yield of the 10-year Treasury, and I'm going to put in here the S&Ps. And so here's I'm going to circle 6.1, 6.8, 6.15. And so you can see, what am I trying to say here? You can see it rises up and then it sells off. But look, the 10-year Treasury broke, and then yeah, they stumble around here, but then they go up, and now they're eclipsing all the new highs. And I'm wondering if something like that isn't about to happen. We'll see. It's not tit for tat. It's not as clean as you'd like to see it, but there's something special there that I've been tracking, and we'll see if it works. But based on that TNX, I said I'd want to buy silver because they're working in opposite direction. So let's look at silver futures, SI. So silver peaks 3rd ATR. By the way, this took a lot of patience. I wanted silver for a while. I didn't buy it, which you know, I was just patient, waiting for the pullback, and you're waiting for the pullback, and it's going higher, it's going higher, it's going higher. It's like yikes. So I get this big day on Tuesday. And so it doesn't quite come back to the mean. But what do I do on Wednesday? First thing I do out of the gate, 8:30, it wicks, the futures wick the mean. I want that. And so buy silver on Wednesday morning at the open, and I buy SSO at the open. And now we'll see what silver does. Maybe it pulls back. We'll see if the yields are going to pull back and markets race higher, metals race higher. But I bought it. I didn't buy silver futures. I bought SLV. And so SLV on here, it doesn't quite, you see, this is why I take my trades off the futures. So I got my setup to the mean, but this ETF never makes it back here. And so the futures are just cleaner for me to utilize in terms of setups. And so you want to see that again? So I don't take my signaling on ETFs. I take my signaling off the futures if there's a futures market for what I'm looking at. So here's silver futures. On Wednesday morning, they wick down to the mean. And then if you're looking on silver, the ETF, SLV, it never gets down to the mean right here. And so I was able to capture that right here. It was up close higher a little bit on Wednesday, and then it's had a good day. Today, we'll see what happens with silver. The metals are just super interesting here. Gold didn't really do much. You know, the silver was what was in play. So those are the two things that I did. Now I want to just show you. So can the NASDAQ? I do like the NASDAQ here. It doesn't mean it can't. It comes down to the mean. If the NASDAQ can get ahead of steam going, it can come back up to this 3rd ATR. And I'm going to tell you something. If S&Ps were to come up to the 3rd ATR, you know what I'm going to do? Take off my SSO position. These are mechanical trades. And if they start undercutting the mean, you know what I'm going to do? I'm going to sell them. And so have a plan for entry, have a plan for exit. But let's do this because I've got a couple stocks here that I really like. And then I had a really nice stock nerd ask me a question about KHC. I'm going to answer that too. So I'm talking about Zoom. No, well, let's do KHC right now. KHC. So stock nerd asked me, hey, Tim, what do you think of the consolidation in Kraft Heinz? And so let's look. Oh, this looks really nice. If you're just setting up a trader, you're just like, wow, it looks really good. But we are a shop that's about 70% fundamental, 30% technical. Now, tomorrow in the video podcast, I'm going to absolutely positively get into this, like how we screen, how we eliminate, what is this 70% and what is this 30%. Going to get all into that with you in the video podcast. But it's a great looking consolidation, right? And I'm going to say, no, it's not that great looking of a consolidation. I mean, it is in that point in time, but look at his weekly chart. Yikes. And so you've had earnings. You're not quite at a, 1272 at 37.18. Can it go? It's a stock. It can always go higher. It can also go lower. That's not really helpful to you. But if I just look at the, just halfway retrace, right? You're like, well, what's halfway on this bar up here? Somewhere around 40. So maybe get 5 more points out of this. Do you come up? Is this all you got? Because you challenged. I mean, if you think about the gap from here to here, did you just challenge that zone and that's all you got? And so what you have here, what I'm describing is, we'll just do O. Okay, that does not. I tried to draw an O. Let's try it again. Yeah. My drawings are world famous. OH, overhead resistance. Okay, so you got some overhead resistance. That's a big deal. That's what I'm trying to tell you. So, my friends, these people here represent weak shareholders. Okay, and you see from 2019 how long it's taken just to get back here, because every time it starts to come up to this, like it was always an opportunity here, right? Somebody on Fast Money said it's an opportunity here, right? Opportunity here, opportunity doesn't knock twice, better get some Kraft Heinz. And so, and then it just woke up. Nobody wants Kraft Heinz. And so, don't tell me your sob stories about Kraft Heinz either. Like, well, you know, everyone's in the packaged good aisle now in the stores and they can't keep stuff. Well, who cares? Doesn't matter. Doesn't matter. And so, what matters is, in this regard, is the fundamentals of the situation and the technicals. And so, do I want Kraft Heinz? I really hope that's Kraft Heinz. Do I want Kraft Heinz, or do I want this? Zoom, zoom, zoom. What looks better to you? Keep in mind, zoom, zoom, zoom is like 260 last week, and it went all the way down to 230. So it's had a wide range. But if I tell you that the ATR over 14 days in zoom, zoom, zoom is just about $27, okay, that seems normal price action for zoom, zoom, zoom. So this is what is known as a flat base in what I would call blue sky territory, with very few weak shareholders. And so what I'm looking at here is a nice consolidation on a weekly chart, same thing that we were looking at just a minute ago, but 281 is the all-time high. So you're so close to zoom, zoom, zoom at 281 that anybody, I mean, if somebody wants these shares, like, are they going to give up their shares here? Nah, probably not. It's at 250, and you've got earnings coming up. And so are people apt to sell? So anyone who wants to buy zoom, zoom tomorrow, what are they going to do? You know, they throw out there like, oh, you know, I've got some shares. We own this in the shop. So like, I've got some shares, right? And someone says, hey, I'll give you 250 for your shares. And I'm like, bug off, man. This is a flat base. I've got a run possibly in the earnings coming at the end of the month. What I'm looking for is to take out 281. You want my shares, you're going to have to pay me, you know, I'm just making this up, 300, right? When you're in this type of setup, the seller names the price, not the buyer. And it's a huge point to understand. When you're in a Kraft Heinz setup, or pick any stock that's gotten beaten down, you don't want to be, it doesn't mean they can't have these great reversals and you can't make a tremendous amount of money. That's not what I'm saying. Those setups are just less consistent. I'm about operating in a world of consistency, 70% fundamental, 30% technical. And what I'm describing here is absolute consistency. It doesn't mean you catch every junk move off the bottom. And that's not me putting down those moves. That's what that's telling you, is that I can't identify those. Oh, tomorrow Spirit Airlines is going to rally 30%. Like, I can't identify those moments in time because I'm not a fortune teller. But I can look at this chart and I can tell you the probabilities. I can talk about the propensity for the want to move higher. I can describe that all to you. It's in the top 5% fundamentally, top 5% technically, and I can even point to a same situation here as the stock was getting ready to report earnings. So chops around, it forms this beautiful flat base, and then 1, 2, and then the week of earnings, kaboom. And so is that what we're doing right now? I kind of think we are. So yeah, chop around, and then as we get ready, get a little bit closer to the earnings date, what's going to happen? Yeah, it most likely will try to break out of this range, take another stair step higher, and so that range is all the way up here, 281. I'm willing to see if that happens here. So I would rather entertain setups that look like this than setups that look like KHC. Hopefully that makes sense. I get that question a lot. The person who asked it just so happened, it was like really clear to me. that I mean, that question, what I just answered right there, I get, Don does too, a tremendous amount. And so hopefully that makes sense. And if it doesn't, just email me, tim@revereasset.com. You know what, better yet, don't email me. My email gets bogged down. What I want you to do is find me on Twitter, which is right here. So @TJReazor is how you get a hold of me. Oh, okay, someone's got a message in there right now. So all you have to do is follow me on Twitter. Let me know. Hey, just tweet me. Say, hey, Tim, I followed you. I'll follow you back. And then you can direct message with me. It's brevity. Why do I like Twitter so much? It's brevity. You keep your questions shorter, I've noticed. Email, you're typing out a novel. And I appreciate it. Those who don't, I love you. You know I do. And then look, if your question is really intense, and that's fine. Love the intense questions too. All I want you to do is call us at 855-732-5932. Those are 3 great avenues to reach any one of us: Twitter, Facebook, Twitter, email, or phone. I just prefer Twitter. It's so much quicker for me. Okay, so that's KHC. That's Zoom. Let's look at a couple stocks here. Let's get this to a, I want to look at bonds here real quick. So here's TLT, and if bonds topped, I've seen this. This is how I've kind of hedged my portfolio with bonds. And so have bonds topped here? Well, if TNX comes back down, so now you're just playing the game, right? So ATR. So here's the third ATR on TLT. This is no guarantee that you're going to see a reversion, but if the TNX has, and it doesn't have, I mean, just because these are just lines on the chart, folks. So they don't have to, in normal markets, they're typically respected. In abnormal markets, which I think anyone could make a case that we may not be in, sometimes they don't. And so, but if you're going to revert back, look for bonds to revert back. And that's kind of, I've decided, the hedging is great when it works, but until I get these VIX futures to invert, and if I get the VIX futures to invert, I'm going to just sell I'm going to hedge significantly or sell a good portion of the portfolio, because the market's very unforgiving the next day. I've found since 2019 when the VIX futures invert. Let's look at it in Amazon. So I'm looking at Amazon. I like this setup in Amazon a ton. Amazon was super red, up 1%. I mean, super green, and then it closed flat. This is a great, 5 coming through the 8. A little topping tail here, but you're going to see that a lot. This 4-hour setup, this 195 setup, that's pretty. It's a nice looking chart you got there, Bill. And so when I'm looking at CDNS cadence, I like that setup a ton too, and cadence. And then CMG, man. Oh, we didn't talk. We should talk about Tesla here for a second. CMG, new all-time high today. This is what I'm talking about. Blue sky territory. Do not be afraid. Stock, there's market levers. Look, do not be afraid of new highs. Like when NASDAQ hits a new high or Microsoft hits a new high. Do you know how many times Microsoft has hit a new high since it came public? Don't be afraid of new highs. Stocks making new highs tend to go higher. And that phrase was beaten into me. It doesn't have to be beaten into me. You just got to see charts. But I learned that really super duper early on when I was working at Investors Business Daily with some really super smart people who were very kind to me. And stocks with that fundamental and technical setup. See, that's the caveat. With that fundamental and technical setup, stocks making new highs tend to go higher. Now you can say, well, Tim, they don't have to have that fundamental setup. No, they don't. But consistently for me, when I've screened for those and I've looked at those stocks that have my and Don's makeup fundamentally and technically, when they make new highs, they tend to go higher. And look, what are you going to do? You're going to be the Johnny Bag of Donuts that comes over here and goes, I'm going to short this. You're going to short down to the 21. Where do you take that short off at? Like you just know that this is the high point. Well, why did you do it here? Or why did you? Shorting looks so easy in hindsight. Like you could say, well, because remember, you don't see this part of the chart. You're going to short here and play for that reversion as it drives you batty and you finally cover, and then it reverts. But then it really doesn't, and then it reverts. I mean, think about this. This is a 1,200 point sell-off in the Dow, and this is all you could do is pull back to the 34 and 21. It's a strong mother humping stock. It's something you want to own. But again, no advice. So these videos are for edification purposes only, and hopefully I am in fact doing that for you. So listen, I've got your video podcast tomorrow night, okay? I've got your normal Friday take you into the weekend video. You got me twice tomorrow, stock nerds. It's going to be great. I'm going to enjoy the interaction with you over the weekend as you watch the videos and send in questions. So please do that. Keep interacting with us. We love you so much for doing so. And I will see you at the next update.